On to lots and lots of earnings that have come in post-market hours yesterday. And of course, Thermax is one of the companies on our radar. For the first quarter, the company's revenues actually declined. Not too much of a decline, 2% drop, but it's the first decline in several quarters. However, there's tremendous margin improvement that the company has exhibited. So let's discuss the trends with Ashish Bhandari, Managing Director and CEO at Thermax. Ashish, great to have you back on. And we'll start right there. So the margin improvement is looking very good. You're in double-digit margins. But let's first understand what happened with the top line and where the drag came in. I'm just looking at the split as well in terms of the specific sectors that saw some pressure. Industrial products and chemicals, they were up in the previous quarters, but they're subdued now. So just take us through what's happening with the revenue.
Okay. No major red flags. That's the top line story. We have a decent backlog. We just need to work that backlog through the system. In Q4, we had a reasonably big, more than 3,000 crores of revenue. So we started this particular year with deliveries that we were relatively short of delivering, that we had to deliver in Q1. But we also had several customers because of the early onset of rains, where many of our equipment that goes to project sites and all, where projects were running late. So I would say in our math, about 250 to 300 crores worth of orders that we would have liked to ship in Q1, where we were ready with equipment, customers did not pick up. Don't see anything particularly of concern. Most of that got cleared in the first couple of weeks of Q2. Some amount of delays even in Q2 on project side. I think weather's a big pattern overall right now, but nothing to be concerned of. We are building a decent backlog. I expect a good Q2 and a Q3 on the orders front as well. And as we work that through the system, we will increase the revenues as well.
Can you give us some sense, Ashish, on how the year could be? I mean, would it be fair to expect at least double-digit growth? I'm still talking top line, by the way, because you also have exposure to exports, and there's just too much going on with the export markets. So just give us some more color on the revenue. Will it be double-digit growth, and how will the exports business be?
At least we are planning for good growth on both fronts. Some of the events of the last couple of days notwithstanding. And our revenues will follow from our orders. We need to make sure we continue to grow our orders, but our backlog is close to double digit. We just need the book and bill portion also to grow reasonably well, which is what we plan to be able to deliver double digit growth this year. At least that's what we are planning for. On the exports front, if you take a look, the first 2 years post-COVID were largely driven by India growth. India growth was much faster than our exports. In the last 1 year, international growth has started to go up as well. And as we enter this year, we are starting with our biggest pipeline for export projects. That includes Middle East, includes Africa, includes Southeast Asia. To the US specifically, our exposure is through our chemicals business and portions of our cooling business. Those are the two businesses. And in our chemicals business, about 20% of our top line comes from the US. That business will go through some amount of uncertainty in the short term. We hope that uncertainty is short-lived as well.
Okay, all right. Hi, Ashish. Good morning. Good to see you in. Well, last year you said it was a year of planting seeds, and now it seems that, the street will be hoping that fruit is what you'll be bearing in the next few years or so. That said, one positive in the numbers was gross margins going back to around 50%, and the EBITDA margins back in double digits, 10.5% or thereabouts. Could you tell us any kind of those one-offs, those problem pockets that we saw in the previous quarters? Are they all behind us? And will the margin trajectory gradually improve from here on?
I think the second part is right. The margin trajectory will gradually improve. We have a couple of areas where we have bad projects in low profitability projects. FGD, a good example of such projects. And in our view, there is about a 1.2% improvement in margins compared to Q1 of last year. That's driven almost entirely by having fewer things that went bad. Yeah, so last year was a tough one in that sense. This year, we would like to continue to show improved margins. We have got some bad projects to work through still. Most of those should get cleared. Yeah, so this year I expect it to be better than last year, but everything that we have been getting in the last 18 months has been things that we like. So our backlog that is building up is of reasonably profitable projects, nothing that is government, large, high civil and construction related stuff where previously we haven't done that well.
So the exit rate of your margins could be, close to around 50, 100 basis points higher than what you have done,
Let's see how the year
in the
goes.
past quarter.
Let's see how the year goes, but at least that's the work and that's the effort. Yeah.
Ashish, I just want to clarify in terms of exports, what is your total exposure to the US? As a percentage of total exports, how much is going to the US?
I'll say what the US number is. The US number is about $40 million a year. Yeah, which is very small. It's less than 5% of our total numbers. Chemicals is the big portion, yes. And the second biggest is chillers that we sell to the US.
Okay, but that's helpful to know that overall it's just 5% of your total revenue, right?
Yes. Total revenue, less than 5%.
Less than 5%, so it's not much of a, there's no need to...
Not much, but there's a secondary impact. We've got many customers in India, especially customers in textiles, pharma, that were expanding quite a bit. Yeah, and those are, if you think about, those are some of the sectors that are investing quite a bit. And as they go through some amount of uncertainty, I expect there would be some. But for Thermax, the news direct connect is relatively smaller. We just have to wait through the next couple of weeks and see how this plays out.
No, but thanks for that important call out that a second order effect could come in via textiles. What's your exposure? I don't know if you have it by industry, but roughly speaking, your exposure to textile players?
We are all 6 to 7%. Pharma would be similar, 6 to 7%. That kind of outlook. But good, most of that, their work is also domestic. Yeah, it's not all driven by exports. So I would say overall for India, I mean, given we export close to $150 billion to the US, there will be an impact. I do hope saner minds will play out and we will find a resolution that works for everyone.
Ashish, always a pleasure having you on the show. Thanks a lot for joining in. You're sounding optimistic about the coming few quarters. Yeah. We look forward to having a chat with you and hopefully things improve on the ground because you're a bit of a barometer with regard to whether or not the economy is recovering or not. Thanks a lot for joining in.